Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, March 31st, 2023. It's now the 30th. We start off in the S&P 500 daily chart into DeMark looking back to end of 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that for end of day tomorrow on the 31st, there must be a close below 3977.53 for the price flip to the buy setup count 1. Nobody knows what will happen tomorrow, but I'll take a quote from FDR saying today is a day that will live in infamy, where 5 levels were qualified and confirmed. This qualified supply line, the qualified momentum up for 50% and 100%, the relative retracement level from October low 2022, and these two supply lines here, 5 levels. And actually it was qualified on 1 bar. It gapped up the other day from here above the supply lines and jumped all 5 of those levels. And today was the confirmation bar. Quite amazing. And you have to wonder if it's more than coincidence that we qualified and confirmed those 5 levels, as 5 planets are in alignment since March 28th. Jupiter, Mercury, Venus, Uranus, and Mars. And I believe it ends today on the 30th, or maybe tomorrow the 31st. So there's now 3 supply projections from those qualified supply lines down here. First one at this level, and this one, and this one. So now there's 2 major goals to the upside. The first one, it would be nice to get this combo and sequential disqualified by TDST qualified and confirmed, just like we did the relative retracement, and then it would nail that propulsion 50% qualified and confirmed exhaustion up. And if it does that, odds are there's more upside. And then that supply line, and then these qualified supply projections mean that the updraft, if there is one, will start to become a bit labored once it starts hitting these. And then ultimately, this relative retracement disqualified up to level here to get qualified and confirmed. D wave has printed the D wave down wave 4 and D wave up wave 1. So D wave is on the D wave up wave 2 and the D wave down wave 5. D wave up wave 2 will print tomorrow on the 31st with a tick lower than this low on the 24th. And for tomorrow, the D wave down wave 5 will print on a tick lower than this low on the 13th of March. We'll check in on the NASDAQ composite overbought oversold chart that includes the NASI summation index and the NDX summation index of the McClellan breadth and volume oscillators. So we'll start with the composite, and you can see it's still at negative 526 or so and just not really doing much. Little bit of a step upwards, but it's really the technology sector, NASDAQ 100, the Qs carrying the day, just like I thought. So there you go. There's 20 or 50 stocks carrying 3,000 or more to the upside. The entire NASDAQ composite, as its ratio adjusted summation index of its ratio adjusted McClellan breath oscillator here is at negative 48.42 and fast approaching zero. And the NASDAQ composite overbought oversold indicator here shows the 30 EMA in green laboriously making its way up to zero. So again, that's 20, 30 stocks carrying thousands of others to the upside. Let's take another look at the NYHILO chart, as the NASDAQ 100 NDX high-low still looks the same as it did a week or so ago. Still the 5 in blue, the red 10, and the gold 21 are headed just straight up in the NDX high-low. And the New York high-low here is definitely improving. The 5 EMA in blue is chasing the red 10. And you can see the high-low line here in dotted is just headed straight up. And the ROC 12 is at negative 28.73. So maybe as the blue 5 EMA is chasing the red 10 EMA, that will give the ROC time to get within plus or minus 5 from 0. And if it does that and the blue crosses above the red, then we really got something going on big time to the upside, as that will mean upside across the board. There was a glimmer of it the other day when technology and the financials, banks, etc., coexisted and jumped up. And the short-term KST is right above 9.91, went above its signal line just straight up like a rocket shot. The intermediate term KST wants to hook around. It looks like it's pulling back on the stick. It's ready to get up above its signal line and start doing more stunts up there. The long-term KST is still pretty much in a straight downwards trajectory. Well, not exactly straight down like this straight up, but it's definitely in a downward trajectory here. Maybe just the slightest glimmer of wanting to turn around and head to the upside. Once that curls around, then you know that it's really on, and by then this 5 EMA will probably be above the 10 EMA in red. Just depends on if we get the ROC 12 signal at plus or minus 5 from 0 down here. The HYG to IEF relative performance ratio, junk bonds versus the 7 to 10 year Treasury bond ETF. And you can see it has muscle memory from around these peaks here back in 2019. This one here in 2022. And then it nailed it recently here and then bounced up. And you can read what traders are thinking when that goes up there. The CBOE total put call ratio charts KST shows that it's headed down in a big time hook around to the downside for more bullishness. You can see the S&P 500's like a rocket shot here. So this is nice. It's going to get below 0 more than likely if this keeps up. And then we'll again be looking at this level down here on this line to see if it's going to, hook around like this. You can see it around that line, hook around and head up. Then there's a sell-off going on then. And I did give it a dashed green line here because it didn't make it up to these upper lines. You can see those are solid. So this one gets a green dotted, and it's not beyond the realm of possibilities that it hits this area up here on this line for a green dashed line and not make it all the way down to this line here around negative 150. We use the scale on the left over here and hook around and go back up. But for the most part, it does make it down to this line here from that area and then hooks around and heads back up. And the big economic reports tomorrow, all of them across the board, are quite big. Personal income, how much are we spending? The PCE index, the core, that's the one allegedly the Fed really follows. Core PCE year over year, and then the University of Michigan Consumer Sentiment final, and then a bunch of Fed speak. So tune that out. At least most of it's after the market closes. Let's see, there's President Williams at 3:05 p.m., so an hour or so before the market closes, he speaks. And then after that, it's after the close for the other Fed speak here. I don't even know what this one, Fed H8 report on bank assets and deposits. Oh, okay, let's see if there's more runs on the banks or the state of the bank runs or something. So I think everybody's expecting this report to be real rosy. You can see in the aftermarkets for the S&P 500 at 8:42 p.m. on the 30th that the S&P price is at 40.62. It's gone up about 0.25%. Technology is still leading the way. Even the small caps dollar index has really hit the skids. It can go down a lot further than that. I believe 89 or 93 is the goal to the downside. That would be a triple bottom, I believe, in that area. So maybe not that far. It's getting close to a bottom. And that means gold is doing pretty well, right at 2,000. That needs to get to 2,078 or 80. That was really close. 2,078.80. So a tick above that will surpass the 2020 high. The S&P 500 support and resistance levels big board chart shows the gray area at the daily horizontal support from 04, 07, 20, 21, R1, and R2. Price in the aftermarket hours for the S&P 500 at 8:52 p.m. on the 30th is 40.62. So to the upside is the daily Bollinger Band upper band and the top of gap zone 2. If it blasts through that gap zone here, and it's really getting into the nosebleed section and really stretched at the weekly high channel 3, but it could get above that and stay above that for a few days. Take a rest and then attack some of these other levels up there in that 4100 area. And there's a bad PCE report and all the other Michigan sentiment, etc. And the markets in S&P 500 will definitely slice down through all these red zones here. So that's the weekly conversion line, weekly 65 EMA, the downtrend line, top of the cloud, S2, S1, the pivot point, conversion lines 26 bars back concerning the lagging line, Weekly diamond bottom extension, perfect uptrend channel, and the baseline 26 bars back concerning the lagging line. Both the S&P 500 and NASDAQ 100's daily AD lines are definitely above their 21 EMA signal lines. And the NDXT lagging line, you can read about the lagging line here. We haven't really looked at that for a while. It is getting very close to its downtrend line here, target 70.82, so it's just 80 or so points away from getting above this line, and that will be another milestone. And the rock one has simmered down again. It's at 0.75 in the green zone, right around zero, and pointed down. ATR2 is back in its green neutral zone, 40.02, and pointed down. Volatility is simmering down. And the PPO extreme has made it above zero. It's at 1.45% above zero. And then I gave this downtrend line, started tracking that level, and that's right at this PPO level 6, so that's right above that PPO extreme. And we'll have to see if there's resistance, because this goes way back into 2021. And I'll just have to see if it can get through these two, or if that's actually going to be resistance. And the New York traditional McClellan breath oscillator to get back to zero. What a turnaround. It would take 3,230 decliners over advancers to get back to zero. So that's pretty close to everything in the NYSE. Have a great day.